Hi, I'm Mike Coe, and I'm taking your open interest. If you have a question or a comment, send me a tweet at Michael_Coe. I'll try to answer it. So I'm going to take a look at this one that we have here. Ryan Williams at Lincoln_Hawk says, at Michael Coe, want to know your thoughts. I'm looking to go long on WYNN, July 150, 170 vert spread. Going back to Oct, they consolidated for 2 months, grow 40 to 50 bucks, then have repeated. Currently showing a bull flag with support at 120, targeting 160 to 170 by July expiration. Okay, so first of all, I do like WYNN as a company. A couple things I would quickly point out, and you probably don't see us recommending trades like the one that you're suggesting all that often. So the July 150, 170 call vertical is considerably out of the money. Now, the upside of a trade like that is that it's going to cost very little. I was just taking a look at the closing prices, and that $20 wide spread might cost $1. 19 to 1 payoff. I mean, this is a highly leveraged upside bet. So that's the good news. You're risking a relatively small amount and have a potentially huge payoff if it happens to work. The thing is, even just for this trade to break even, assuming you held it to July expiration, which is not necessarily what you're planning to do, but if you did, getting to that 151, 152 price level, 151 would be the break even, 152 you'd double your money at July expiration. Probability of that's actually quite low is implied by options prices at the moment. I think it's implying about a 15% chance that you get up to that level. So a very low probability. That said, sometimes people use options to improve their probability of profit. Sometimes they use it to risk less money. You're risking less money than buying the stock. And sometimes people use options to try to bat it out of the park. Now, the other thing I would quickly point out about getting up to those kinds of price levels is that currently, let's see what we got. We got a valuation, enterprise value is about $23.5 billion for WYNN right now, and the market capitalization is about, well, it's just shy of 15 billion using round numbers. That's valuation levels that we haven't seen since the end of 2019, a period when the company had $6.6 billion in revenues. And it's not expected to achieve that again until about 2023. And the company has taken on some debt. Obviously, they needed to basically to shore things up a little bit when revenues essentially fell off a cliff during the pandemic. So, this is the kind of trade, very low probability, very high payoff if it hits your price targets. But I think it's important to remember the price targets that you've chosen here are pretty ambitious. Otherwise, I do like the company. I do like it as a long. So those are my thoughts. I hope that helps you. If you have a question or a comment, send me a tweet at Michael_Coe or leave a comment in that section below, and I'll try to answer it.
Market data